Good afternoon, everybody, and welcome back to the Share Series hybrid event. I'm Sarang Vora, research analyst at Telsey Advisory Group. It is my pleasure today to interview Mike Tattersfield, President and CEO of Krispy Kreme. Welcome here, Mike.
Pleasure to be here.
Yeah, you have been the CEO of Krispy Kreme since 2017, and you have been in the business for a very long time. So share with us, how the business has transformed, since you joined the company to 2022 last year, and any overview on the company you can provide along with.
Yeah, I'll just give a quick overview so people get a sense of what Krispy Kreme is. It's an 85-year-old donut company. It has 400 producing donut shops, theater shops that you might be aware of, where you get your hot lights on, and that's around the world. It delivers fresh donuts today to 12,000 locations. Those locations can be fresh shops where we're delivering a fresh donut to them, but primarily they're grocery stores where we're filling up a cabinet or a convenience store. So you have a logistics business now that's running a fresh model. That's been the big transformation that's happened in the business, which is the number one challenge that Krispy Kreme had with only 400 producing donut shops, which is how do you get customer access? So if you change the model to get to where customers are and really start to implement an access point to where they are and how they want to get their donuts, as long as they're fresh, then the brand will continue to thrive. I've been in the business, a little bit of background, with Caribou Coffee and Yum brands, and I've always just admired this amazing brand, and then ensuring that even as not only have been 7 years of a CEO, but I helped to lead the deal team that acquired it when it was a publicly traded company. And then, sometimes you're the deal maker and you said, well, why don't I run it for a little bit? I've got a bit of experience and have a lot of passion for how do you get this incredible brand to really achieve its potential. And that's a little bit of the overview.
That's cool. One exciting fact I loved about is you sold 1.6 billion donuts last year, so that was very amazing.
That's a lot of donuts.
That's a lot of donuts. Didn't expect that. So just give a little color on the competitive landscape over here. I know you are the donut company, but there is a lot of sweets out there. So who is your competitive set over here?
So when one of the big directions that we have of the company is how do you become the most loved sweet treat brand in the world? So that's not about competing in just a donut occasion. You're competing for the sweet treat occasion. The majority of our business is sold in dozens, right? We don't focus on the single donut occasion. We sell dozens of donuts. What we've learned is 37% of our dozens are gifted, and 80% of our dozens, when someone buys a dozens box, are shared. So we compete in the occasion where anybody's looking for a sweet treat break. We compete at all gifting type opportunities. So if you think about Valentine's Day, we compete against the chocolate industry. We compete against flowers, right? And try to make sure you have this incredible, affordable, indulgent treat. And we continue to look for other opportunities where we can really capture the imagination, whether it's St. Patrick's Day and you can unlock opportunities, whether it's Halloween, whether it's Christmas. So how do you maximize that with this incredible sweet treat brand? And the ability to do that now is a lot more practical because of the 12,000 locations that we serve every day, with a plan of growing up to 75,000 points of access on a global level. So growing from 12,000, 10 to 15% of new points of access on a yearly basis. So very clear, methodical approaches to how do you want to build the business. Competitive set. We compete. I compete against the birthday cake. I compete against the chocolate. I compete against ice cream, right? Sweet treat space isn't going away. You just want to be in the consideration set when people are making that choice.
That's great. And glad you pointed that out. So looking inside at the growth strategy, feels like, you have 12,000 points of access today, and you mentioned 75,000. So help us understand, how annually you plan to grow the points of access. And, initially in the US, and then, we can go international because it's a big part of your growth story as well.
So you take those 400 producing donut shops, right? We'll end up growing in the US. I'll break it down. US will probably grow between 10 to 15 producing hubs on a yearly basis. That then unlocks 10 to 15. There's 6,000 points of access in the US today, and we can unlock 10 to 15% new points of access on a yearly basis from those new production shops, as well as we start to leverage the efficiencies in the marketplace, right? So you can start to see there's 300 producing shops today in the US.
Yeah.
We'll be adding those 10 to 15. We will, by geography, our main point of access is the groceries business, the convenience shop. So you start to get more effective in your networking when you build that out. If you start looking outside of the US, there's only 100 producing donut shops, right? So you can see that size of business will look at some, and they're mostly run by franchise partners. So we're not just an equity business. And they have the same model of growth now. Think how attractive it is to a franchise partner. Instead of saying you have to sign up to open up 100 donut shops per country, is that you open up 4 producing shops. You now then need to build the donut business in that country through a logistics and a very thought out plan to how do you get the channels right, and then they'll be building from there.
That's cool. And in the US,
Yep.
The growth in the grocery business you mentioned, there's multiple channels of growth. First you are testing donuts with McDonald's. There's a test underway, so love to hear about that. And then, as you look at US, like which are some of the partners you are under-penetrated right now? You have a relationship, but you are under-penetrated, like maybe Target or Walmart. And, where do you see the expansion in next at least 3 to 5 years?
So if you think about it, just with 300 producing donut shops today, I only serve about 25% of Walmart's doors, right? Because we just don't have that expansion. You can't serve their network. Anytime we open up a producing shop, they're trying to figure out how do we get on the next Walmart to things that make sense. So
Yeah.
Customers, you mentioned also McDonald's and others, but I want to give a snapshot. What we've created is this delivery fresh daily logistics model, right? So it needs to perform the exact same model, whether you're serving to a grocery store, whether you're serving to a convenience shop, whether you're serving to a drug shop, whether you're going to a club business. And we knew once we had that logistics down that you could serve fresh to them, that the quick service restaurant would be an opportunity. As a donut company, you're trying to get donuts to where customers are. When you have an opportunity to work with someone like McDonald's, one of the premier and most admired restaurant companies across the world, it had to work with us operationally for us to be able to do that. So the DFD model that serves currently to Walmart can make these drop off to the McDonald's location as well without changing anything of what we do. And the restaurant, as what we learned when we did a test in November with McDonald's, is does it work the same for them as it will for us, right? You can't start modifying every single customer and having a different logistics model for them, or it just won't work for you effectively. So when the operations is seamless, you can deliver the quality, you can deliver the timeliness, you can deliver the assortment. Then you work with the partners that want to actually say, hey, would you ever allow anything special? And I said, as long as it's being done in Krispy Kreme, we can actually match that to you.
That's great. So it's more about the logistics of building up the growth pipeline over here. And as you open these hubs, you are able to cater to more of the Walmarts and McDonald's and some of these franchisee in the regions.
So what the interesting thing about logistics and routes, right? So now as you start to open up routes, you might be able to get to that extra Walmart location that you wouldn't have been able to do on your own. It would have been too far and not profitable to do that route. So the efficiency of a route becomes really interesting, which is how you want to look at channels. And the unique unlock is, does a delivered fresh daily work across all of them? And it does.
That's amazing. Shifting gear internationally, a large part of your revenue is international. There is a chance to see acceleration internationally. So help us understand a little bit of, countries that are larger on your footprint right now, as well as some new countries that you plan to expand in the next few years.
So our largest international markets, we even actually have a segment we call international, which is the UK and Ireland, Australia and New Zealand. And, we also have Canada, we also have Mexico, we also have Japan, right? But those are our big equity investments that we have today. We have significant growth opportunity in all of them. A lot of them, Australia and the UK, actually pioneered this DFD model that we're talking about. So when you come in as a new CEO and you're trying to figure out what's different about the Krispy Kreme of 8 years ago, let's do what's really working around the world. And it's really working in the UK and Australia, how they do this donut business. Let's translate that to all the markets.
Yeah.
That allows us to really unlock the development opportunity that's happened in the last year. We're going to open up 7 new markets this year alone, right? Which in the past, it used to be the teams would have just let's sign up donut franchises and just see where it goes. Now we are actually building a donut company in every country. We don't need to operate it. We have franchise partners that can do that, and then make sure that they can develop that DFD model, the donut shop model, and do it effectively. New country growth will be in places like France, which will be one of the countries that is going to be opening up. Chile will be opening as well. In fact, by the time we're done this year, we'll be in 6 continents, right? So the only one we're missing is Antarctica. So if anybody here has got a really big business idea, you can pass it on, but it's a little chilly there and there's not that many people, so I'm not sure how that's going to translate. But the opportunity then is to really, how do you then have the discipline to open up 3 to 5 new countries on a yearly basis and make sure that this isn't about putting flags everywhere. It's about making sure the donut business can actually perform in all of those markets. What we've seen with the brand Krispy Kreme is that sweet donut, that works everywhere. In fact, 31 countries grew last year. Every single one had organic growth. Think of the challenge that's happening in the last few years. When you have that track record where every single one grew year over year, and probably one of the tougher inflationary models, it just shows you how the brand can translate. And then just the uniqueness of the brand and its purpose really does translate well. And the gifting and sharing opportunity tends to work around the world really well.
That's amazing. So I know we talked a lot about the growth, the number of doors, but there is also an opportunity to increase revenue per door. And you are working towards that as well. Some of the things I know is premiumization of donuts, omni-channel experience. So can you share a little bit about how you are trying to increase revenue per door at this 12,000 doors that you already have?
Yeah, I mean, the single biggest one, so the biggest opportunity, the majority of doors, particularly, let's say in the United States, are a tower-based structure, right? Where you can walk into a grocery store and you'll see the box of dozens being sold. The big unlock that you do is when you can get a cabinet into those grocery stores. So then you have that single purchase selection and assortment. And then the exact same thing that you're selling inside a Krispy Kreme in our donut shop is actually being sold in the grocery store. So that's when the unlocking really starts to happen. In fact, we've seen sometimes that revenue can sometimes double.
Wow.
Right? So you can see that just that efficiency of making sure you can do that. Now you have to have the discipline of, how you're going to do that. What is this? How's this going to work in all the channels? How do you manage all those channels? The other thing that's really started to happen as we just focus on doing donuts. I get questions a lot about the coffee business or the beverage business. I go, Remember, we just have 400 producing donut shops. We're focused on donuts. In fact, sometimes beverages is less than 5% of anything that we sell. So just that focus on doing donuts attracts some of the best partners that you can get in the business. So we're able to premiumize. And when you're able to premiumize, you can create Really interesting donuts, such as a Biscoff cookie donut. From an English brand, right, that we brought to the United States, and you can actually really unlock a very unique taste profile, which is really, they want to be partnered with Krispy Kreme.
Right.
You know, we've done things with a Twix cookie and an oblong donut shape, right, where you're actually having the experience of a Twix bar and a donut at the same time. You want to see both brands come to life, and then you're maximizing both experiences. The unique that the brands get is we're such a social media driven brand with sometimes 30 billion impressions. We probably drive more impressions than their marketing department might drive for their brand, a paid brand on their own right. So that's where we see a lot of the really interesting pieces. But when you combine that power of can you premiumize the experience? Because people are always willing to say in a sweet treat occasion, they're willing to trade up for something that's worth it to them. Then you can provide them the right assortment. And we just focus on this because the reality is majority of our customer base only comes to Krispy Kreme 2.5, 3 times a year, right? So you want to maximize that opportunity by making sure you have the right product, you have the right access point. And then when you even then combine the next step, which is bring the delivery, bring the gifting aspect of it, really bring that true broad omni-channel approach, you become at center of a lot of their sweet treat occasions, right? So that's how you drive the frequency, not just in the doors, but even in the shops.
That's amazing. I mean, digital, just staying on this topic of digital, it's a big part of your sales, almost 18%. I was surprised to see that. What are some of the changes that you made over the past year in understanding the consumer, that is driving this strong growth? And what are the upcoming changes we can expect in the digital side of the business?
You'd always say, wow, how'd you get there?
It's
the reality of the story sometimes is let's go to February of 2020, end of February 20, I think February 28, 2020, we launched delivery and e-commerce. Prior to that, Krispy Kreme's e-commerce digital business was 1%, 2% of the business, right? So you can see this transformation, which is how the customer wants to get Krispy Kreme. When you can start to unlock the logistics, and we use third-party logistics, right? And then we start to figure out how can we do that from our fresh shop? And from our fresh shops, if you can have a fresh shop route, and then a delivery can pick up from the fresh shop and extend your geography, more mileage, you start to build a bigger network. So that gives you an idea how. What we learned a lot were 2 places. We learned a lot from some of our international partners. We're up to 30%.
Wow.
So clearly our goal is how do we become 25% of e-commerce? A lot of that will be done through delivery, but a lot will be done as our gifting business continues to take off and the occasion base continues to match, and including customization. So if you can get those without having to travel, because with 300 donut shops, sometimes it might take an hour, 2 hours to get to a Krispy Kreme. And the number one discussion I always get is, when are you going to open up a new one near me? And I sometimes have to tell them we're not. We're going to get to fresh distribution where you are. And then the other unlock for us is we do have another brand in our portfolio. It's called Insomnia Cookies.
To go there.
Right? And Insomnia Cookies is actually focused on being an e-commerce driven brand. Started in the UPenn. It's a little over 20 years. And it is focused on delivering late night cookie experience to customers. And it's now moved beyond the college to the city locations and eventually getting even to suburban. Right? So you can see that evolution of an incredible, really what warm, delicious, delivered is what their mantra is, right? What they try to do every day. They also sell in the dozens. So you could see when we made the acquisition, it became very similar to the same growth pattern. In fact, sometimes we talk about Insomnia as the next Krispy Kreme.
No, it's amazing.
It's an incredible growth story in its own right.
Yeah, I mean, just about to go there. Insomnia, they have about 400 stores. What's the path for that brand? Like, can it, you mentioned it can be the next Krispy Kreme. So how do you see this brand evolving in next 3 to 5 years? Any store targets or any economics you can share on that particular brand?
Yeah, what we've shared, it's about 200 cookie shops today.
Okay.
Right? So they'll be opening between 30 and 40 cookie shops on an annual basis, right? So you can see their TAM is what they think about in the United States is 1,000 cookie shops.
Wow.
The important part, we've been working with them, and the founder's still with us. So it's not normal sometimes to keep your founder with you 4 years running. I'm still as excited about since the first day he opened up his cookie shop. So there's this really good cultural connection that we built with both brands. He sees the opportunity not just in the United States, which he's been going through the city and now suburban, and then even thinking about how the suburban consumer will engage, with them, and those are the next steps of why they'll get to 1,000. And clearly, this year we'll be opening up in the UK and in Toronto as well, right? So you can see that there is that similar type of customer base that exists around the world.
Yeah.
And really the first time he's come back and looked at a TAM that we talked about on our investor conference in December of 4,000 cookie shops as well. So you have two really significant growth stories going on with both brands. 10% top line organic growth and combined when you think about Krispy Kreme, 11 to 14% EBITDA growth on an annual basis. If you think about, you've got a lot of geography that we're covering, and we've got just tremendous brands. The real thing is you were getting into insomnia. I'd just say the return on capital is significant. It's a 1-year payback.
Wow.
When you have a 1-year payback on an investment where you can see the ability of driving the returns on that business and a top line growth getting a little closer to north of $800,000, right? So those are things where you can start, and the efficiency of that is really driving the business incredibly well.
That's amazing. I mean, it's a great product as well, just like Krispy Kreme donuts. Just staying one more final on the digital side, it seems like, from a digital marketing standpoint, you have been trying to track the retail calendar more closely, creating customized products more around events like Easter, Valentine's Day. How big, just tell us about the evolution of this. Like, when did you start it? It seems like it's becoming a bigger part of the business now, like around the key retail events. And where are you in terms of like following all the key retail events today? I feel like there's still an opportunity over there.
So when you think about it on a global level, right, there's a lot of retail events. There's national events. There's a lot of things. But when we first started, we got into business, there was a lot of deep discounting going on in Krispy Kreme. And we shifted away from that model. And we shifted away and started really focusing on the freshness and the high quality of the donut, right? I always called it, can we just do one thing incredibly well, do freaking awesome donuts? And then from there, we'll start to build, what does that mean? The natural evolution was how do you take advantage of that gifting and that sharing opportunity? They tend to be around occasions. They tend to be around birthday celebrations. They're not just national events. They're family events, right? So if you're always in the discussion about when do you celebrate? What do you celebrate with? How would Krispy Kreme become in that consideration set? So you keep on doing unique things. I can give you, as we've even talked about in our earnings discussion that we had for the first quarter and how we started the year. We started out the year with a Biscoff promotion, which was fantastic. We did really well. And around the world, the first time they really did a focus on a Valentine's Day promotion. And it was one of the strongest Valentines that Krispy Kreme has had. So again, focusing on donuts, we used a lot of Hershey as our partner around the world. And then if you take other opportunities in America, it might be a St. Patrick's Day, right? Where you can actually unlock a green glaze. How would you then take that to the 6,000 doors in the US? And how do you maximize that? And how does that work? So you can see as you're looking at the calendarization of key activities or events, that opportunity continues to grow. We continue to look at where the opportunity is. How do you make sure that whatever we're doing doesn't just get at the 400 donut shops? How does it get to the 12,000? Eventually next year, how's it going to get to the 14,000 doors if you start doing your math and think about it that way, right? So you want to see that donut experience can translate. And the unique thing that we can do, which is not just about events, we can turn on a dime and actually capture a cultural event and see if we can translate something to a donut. Sometimes we do it whether it's an eclipse or a strawberry moon, and we can turn that around. And today we can only do that in our donut shops. But you can imagine our thinking is, how do we actually calendarize this so it can get to all of the point of access? Because then you're really seeing the power of this brand come to life. There's not many brands that do that. If you think about CPG brands, it takes them a year out in calendar. And we're trying to wiggle around like, can we do this next week, right? So think about that dynamic part of that merchant piece, which is one of the things I've really tried to instill into the company. It's you've got to make sure that you're always at the forefront and do some really interesting things with donuts.
That's great. I know I have a few more questions, but I know we are almost there. So if anybody in the audience would have a question, please feel free to ask.
Who here's had a Krispy Kreme donut? How about that? I'm sure if I brought down the boxes downstairs on the trading floor right now, I might stop some things. So,
cool. Just staying on shifting gears towards profitability. You run a very profitable business model right now, but there is still an opportunity to improve as you improve the logistics and sourcing. And talk to us about where you see your margins headed or your EBITDA headed from $191 million you had last year on adjusted basis.
Yeah, I'd say from percent and margins, I think our goal in 2026 is we'd like to get to 15%. Okay. We'd like to get close to that. I think the biggest drivers of change will be, how do we continue more efficient? Whether you're building your route structure and what does that mean? What are the labor opportunities as you're scheduling routes, and how's that working across the world? And even how's your G&A continue to be more efficient as you grow? So the opportunity of scaling that there, and you're thinking about, I think we laid out a target about 315 million EBITDA in 2026. So if you're looking at it from that perspective, you can see the growth stories very much there. When you're thinking about us, organic growth, it's 10%. Yeah. Right? It's how do you drive that efficiency? And I gave you the three main drivers that are there today.
Last question for me. How is automation? Is there an automation behind making, as you grow your scale, is that also an opportunity to improve the margin profile of the business or less so? Just curious.
Yeah, and automation will take effect, whether it's the digitalization and how people interact, right? Or it's actually taking the mundane task of what a Krispy Kremer is doing today, but not making everything robotic, right? What you need to do are the things that are going to make it much more effective for the logistic and routing system, but make sure that the Krispy Kreme experience still has a touch and feel from Krispy Kremers where they can make the connection. I think it's a balance of that, but you will see automation coming into our larger factory stores that are just distributing potentially to just to the grocery stores or convenience stores, and you'll see that change happening now in the next 18 months.
Great. Thank you. Thank you so much, Mike.
You're very welcome.
Great story. Good luck ahead.
My pleasure. Thank you.
Next on stage is Aaron's. Thank you, everyone.